All right, so imagine this. You want to buy a home, so you start looking around to see if you qualify for any first-time homebuyer programs. You call one lender and they quote you a mortgage rate of 7.25%, charging 1 point up front. But then you give me a call and I offer you a rate of 6.875 with 0 points, saving you over $6,000 in closing costs and knocking $150 off your monthly payment. But what if I told you that it wasn't because my rates are just magically better? It was simply because I knew the pricing rules. I asked the right questions, and they didn't. Unfortunately, many buyers never find lenders who know all these details, and they end up paying higher rates and fees. Or worse, they even delay buying a home altogether. First-time homebuyer programs can offer huge savings, but many lenders miss critical details that unlock all the savings. And that's why it's important for you to understand exactly how these rules work to ensure that you get the best rate possible. And today I'm going to discuss the most common first-time homebuyer programs offered by Fannie Mae and Freddie Mac. You'll learn the income limits of each program, how to qualify, and most importantly, a special loophole that lets you take advantage of better pricing even if your income is higher. But first, a quick shout out to the Federal Housing Finance Agency, the FHFA, for offering special pricing for first-time buyers. With home prices and mortgage rates still high, every little bit helps. And my goal is simple. It's to get you into homeownership as early as possible with the lowest possible costs. So let's break down these programs, starting with Fannie Mae's HomeReady and Freddie Mac's Home Possible. Now, I'm combining these two here because they're essentially identical. These programs are designed for home buyers putting as little as 3% down and whose qualified income is less than 80% of the area median income. For example, in the Baltimore MSA, that's $104,240, and in DC, it jumps up to $129,600. Now, these programs offer reduced private mortgage insurance, which is PMI, and it significantly lowers your monthly payment. And even better, your down payment can be fully covered by gifts, grants, and other assistance programs. Now, there's another big advantage, and that's border income. If someone you've been living with, let's say, is paying rent and they plan to move into your new home with you, you can actually count up to 30% of their rent as qualifying income. And many lenders just miss this entirely, and it can make a huge difference. A quick homebuyer course is required. It's pretty straightforward and totally worth it for the savings that you get. And unlike many subsidized programs, HomeReady and Home Possible, they don't restrict the program for those who have had prior homeownership. In fact, you can even own another house at time of buying your new property as long as you qualify based on the income standards. Now let's talk about just the standard first-time homebuyer program. This program allows higher income limits, up to $130,000 in Baltimore and about $194,000 in the DC metro area. It completely removes the loan level price adjustments, or LLPAs, guaranteeing you the best rate from both Fannie Mae and Freddie Mac. Now, for a quick overview on those obnoxious LLPAs, be sure to check out the video that I did on that topic right here. Now, there's a big loophole that most lenders miss with this pricing special. When lenders ask, how much do you make? Or when someone's kind of filling out an online application, they usually respond giving their total income, which usually includes overtime, bonuses, side hustles, just all this other stuff, like how much they make in total. But that's where the problem is. Earlier, you may have heard me say qualified income, and that means the income we are choosing to use to qualify you for your mortgage. I can simply choose to use your base pay only, or omit your spouse's income entirely. Now, that story I opened up with where I said someone would call me and find out a rate was much better, that happens way more than you think. And loan officers and mortgage companies mess this up all the time. But you've probably heard me say before that a great loan officer is someone who asks really good follow-up clarifying questions and who knows the rules inside and out. You owe it to yourself to work with that type of loan officer. Now, there are cases where the reduced income pushes up the cost of your mortgage insurance or simply isn't enough to support all the debts. But either way, I always start by trying to exploit these programs just to make sure you have the best overall pricing whenever possible. Another important loophole is homeownership status. Many lenders see one borrower already owning a home and they immediately disqualify the application for this extra savings. But if a co-borrower, like a spouse or a partner, hasn't owned a home in the last 3 years, they can still qualify as first-time homebuyers and receive the better pricing. Again, who you work with truly mattered. Now, I create these videos to highlight the importance of working with skilled mortgage professionals. And if you're ready to buy your first home and you want to make sure that you're maximizing your savings and getting the best overall rate structure and cost structure, I'd love to help. Reach out to me directly. I'm committed to making homeownership affordable and simple. And if you're not ready to chat just yet, just be sure to click here and watch my full playlist on buying your first home so you can be best prepared. I look forward to seeing you in the next video.